Hey guys, Veteran here with Independent Traders Guild, the ITG group, and I'll spend a quick minute talking about supply and demand and how it can be the most impactful strategy and tool that you pull out of your tool chest while you're trading. Little differences between supply and demand and support and resistance lines, why they're both important. I'm not going to go too much detail to keep the video short, but do want to express the differences between the two and how they're both used. In front of me is the SPY, and that is this week. And with it, you can see the levels that we have. These are the intraday volatility levels, and I call them supply and demand levels. Although, as they expand out, we get outside of supply and demand zone that is manufactured by an algorithm, and we get into support and resistance. And these levels are auto-generated for us and for all our members. So as we go through, let's go back and let's start it at Monday, and you'll see the white zone. The top is your supply zone, and the bottom is your demand zone. And the demand zone comes into play when you're thinking of in terms of buyers, and supply comes into play when you're thinking in terms of sellers. And there's an imbalance where there's more sellers than buyers at a supply zone, which causes the price action to fall back down or retrace lower. And there is an imbalance of buyers on a demand zone, which causes price action to stall or stop and find what we call support. A demand zone is the major support level for the day. So we call our demand zone and label it as demand /S1. The supply zone is the major resistance area. And so we call it supply /R1 for resistance 1. And those levels are auto-generated from the first tick of the day. It goes back, the data goes back a 3 to 5 day look back on all our levels, and volatility are in, so it's not just generic. This does not replicate you drawing trend lines. This does not replicate you drawing horizontal support and resistance lines from previous wicks on a monthly, daily, or a monthly, weekly, and daily chart. We'll do another video on those. I will show you real quick. I'm going to drag this one from Monday. This zone, Monday is substantially bigger than Tuesday, and even more so bigger than today, Friday. That said, they're different every day. It's not there's not a formula that says this was the closing price, this is what the demand is, and the supply demand zone is going to be the same distance every day. If you look at Monday and you'll see the range, you'll notice that the first buy target, the first gray line is R2, resistance 2, and followed by the buy target 2. You'll see that that is substantially wider than that's demand S1, and that's sell target 1, that's sell target or S2, and sell target 2. So support 2 and sell target 2. Each time, and we have data going back that each time that an S2 is crossed, we know the probability that the price action is going to achieve the sell target number 2. And again, is trading as running a hedge fund, on Wall Street and using quantitative analytics. We use probability and statistics. We often use it. That's a big part of our trading at ITG, and it's a big part of what is kind of set me aside from a lot of the different hedge fund managers over the past. For us to get into a trend up day, we've got to get above the supply zone, and realistically, we're looking for R2, resistance 2, to turn into a what we'd call a trend up day or a bullish trend day, and that's where the buyers outnumber the sellers. On the flip side, if we get down below S1, which is the demand zone, and we've gone where the sellers actually are outnumbering the buyers, then they're going to move to the downside. And if we get down below S2, supply 2, or support 2, we're looking at a potential trend down day. It is important to understand that inside the white box, the supply and demand zone, is where these zones, they drive price discovery. And every day we've got to put the pieces of the puzzle of the market together to find out, where is the imbalance between buyers and sellers, low value area, high value area, low volume nodes on a market profile, high volume nodes, support, resistance. We have to find out where price discovery is taking us. And what you'll typically find here, going back to this Monday, is that the opening price, we move lower. We move to sell target 1. If you were quick enough to take a trade, keep in mind this is a 15-minute chart, so there's a little bit of time in this candle. But usually you take a sell trigger, the red level, down to the white level. You take half off at demand zone S1. You take the remaining half off at sell target 1. You'll see that we stayed in this range. These are 15-minute candles, so you're talking about 45 minutes to an hour. And as we stayed in this range, what happens is we have institutions start to accumulate and or distribution. So it's either accumulation or distribution in these zones, and we'll range in there to allow the institutions to fill, the big boys to get their fill of their position before they'll move it higher or drive it lower. And the reason they do this is they want price action to stay in an area. They're trying to fill hundreds of thousands of shares, or even more, possibly millions of shares, or contracts, and they can't get filled in 30 seconds. And so they need price action to stay in a certain area, and they'll bull you this. And you'll hear it often that we'll range for a bit, and then we'll trend up to a next level, and then we'll range again. And in that next range phase is again accumulation or distribution. So the blue line is simply the midpoint between the green buy trigger and the red sell trigger. And so on Monday, we never got above the blue level from the opening bar. We called in last Monday, the highs of the market we're in for the day. I do have a quick print that I can post, and that's as simple as looking at the yellow dots. We formulate the yellow dots in the opening range. That's again a proprietary software, and we never got above it the whole day, the entire day. So this day was a great day to sell call credit spreads above the supply zone or the buy target 1, and it was a very profitable day, and it was a range day, and we were ranging for the day, but we were ranging at the lower end of the supply demand zone. Okay, move to Tuesday. Let me take the dots off. Those are my ranges. Tuesday we opened up and we got above R1, supply zone R1, and I don't know that you could have gotten the opening trade at the buy trigger. Could have taken the trade from R1 up to the buy target 1, gotten profit out. And again, the difference between support and resistance and supply and demand is supply and demand. We don't know these zones ahead of time. The market gives them to us. They are market generated data points. Very, very important. And they're essential in our line of work in trading, because this is where institutions typically will pivot and stop and reverse. So a lot of times you will see us spike up or spike down, and see how on Monday we barely got below sell target 1. We had no 15-minute closing bar below that line. That's where buyers stepped in. So even though the white zones were up here, you could shift the white zones a little bit lower for that day. And that was a very realistic, at the end of the day, that we had a range day. It was expanded to the downside. No different than Tuesday. On Tuesday, the 28th, you'll see that the high tick was the buy target number 1. And from the buy target number 1, we reversed back lower Again, we were looking for a reversal or retracement or a continuation higher. We got a retracement, and then we closed below the buy trigger. We're right in the middle. I call it the over under, and then we got below the sell trigger. And once we got below the sell trigger at 11:15 in the morning, we never once got back above the midpoint. So we were in a sell trend for the rest of the day. That's playing long puts. That's selling call credit spreads up here for premium. That's taking the credit that you get from selling premium up here and going long premium here. And we went the demand zone S1 to sell target 1 to S2 to sell target 2 to S3 to sell target 3, and we never breached S4 to trigger a move to sell target 4. Very textbook trend down day on Tuesday, even though we opened higher and the market makers trapped some bulls. Go to Wednesday and we opened lower. We came off of the demand zone. We moved back higher, and you'll see that we were in a very, very tight, concentrated position inside the zones. This is where we get into range day rules. So Monday and Wednesday were range day rules this week, and Tuesday was clearly a trend day rule this week. We'll do another video explaining range day and trend day. Move to Thursday. We had a top wick at supply zone R1. We drove all the way down to sell target 1. We climbed back above it. We got above it. We got to the supply zone. Once we got above the supply zone, we triggered. Again, you're taking green, half off at white, leaving the runner, setting your stop at white, leaving your runner to see if you can get to orange. And you're going to do the same thing. If we get to orange, you take a small position, add to your position at gray, take your position off at orange. And guys, it's just a process of level to level training. But you'll see white to white, and we're in this zone. This is a range day. We never broke out above the supply or the buy target 1 to the upside, and we had a look and fail in the AM session in the first hour, the opening range, where we did a look and fail below the sell target 1. This was a range day rule, and again, this is just supply and demand, guys. I'll put on some support and resistance lines here in a second to see you. And then we move to today, and I'm going to slide it over and expand it up a little bit so you can actually see the ranges. And there were some other Discord leaders on Twitter, posting levels and support and resistance and supply and demand levels, and I sent a couple of them on our chart. But this white zone, and it's shaded, and it's only shaded because I made a rectangle and put it in here just to kind of highlight where we go. But today we opened higher. We got up to R1 supply. It was rejected. No close above it. It was rejected. We retreated. We crossed over the sell trigger. Take a short. Half off at white. The rest off at purple. The sell target number 1. We get down. We get no closes below S2. So you don't take a trade. If you were still in it, you had runners. They were extremely profitable. We got back into the zone. Again, the red is sell trigger. Anything below the red, you are looking at primarily for position trades, trading to the short side. Bearish trades below the sell trigger. Above the buy trigger, you're looking for bullish trades. Well, as we move into the rest of the day, we're in a look and fail up here, a look and fail down here. We're in a tight range until we get in towards the afternoon session and we move back above the blue line. And if you go to the left, this is the first close above the blue line that we had since 10 o'clock in the morning. The fake move to the upside. We get another move to the upside. If you took it, you took green to white to orange, and you closed at the high of the day, pretty darn close to the high of the day. That's supply and demand, ladies and gentlemen. Now I'm going to expand this up. I'm going to go out to a 5-minute chart, see if I can get just the last 2 days on here, and then I'm going to pull up some support and resistance just real briefly. Not going to spend a lot of time, But I'm going to pull up a support and resistance line so you can see the interim lines in between. Um, and often we'll hit them. They're the thinner lines. You'll see that we had one here, this red cell. That was all the way back on Wednesday. You'll see that Thursday afternoon we hit a support line, and that was this purple line right down here. So we got below again, sell target, demand zone, S1, sell trigger, I'm sorry, demand S1, sell target 1, S2, got to S2, then we moved to sell target 2. But you'll see the different lines, and I can take them on and put them off. But you'll see the different lines, and so we have auto-generated support and resistance levels that are basically, a combination of prior highs, prior lows, as well as Fibonacci extensions, and we duplicate that on top of our supply and demand zones that we have auto-generated. That allows us to trade level to level. That allows us to stay when we're above the white to the upside. You're taking long trades. Realistically, the green for SPY. When you're below the red, you're taking bearish trades. So the computer tells us, are we bearish or bullish for the day, but also are we bearish or bullish for the next 15 minutes, for the next 5 minutes, for the next 2 minutes, for the next 1 minute, whatever you trade. These levels don't change intraday. They are fixed from the opening print, and you'll see that the gaps to the upside a lot of times is tighter than the gaps to the downside. And if the expanded range supply and demand zone tells you there's an expansion upwards, then there's an upwards bias on the day, and there's an upwards bias and skew towards the option data. And that's, guys, a key part in how we're as successful as we are. That's all I got. We'll have a little bit more discussion on this on our website for our members, but I wanted to send this out and wish you guys the best of luck. Feel free to reach out, ask us if you got questions, and give us a shot if this interests you. Y'all take care. God bless.